Welcome back. This video, we're going to be covering last week's trading, and I'm going to talk you through my thought patterns, and then we're going to cover the lessons that you guys can take away from this and that I'm going to learn as well to improve our trading. So let's get into it. As requested, I'm going to be including my charts and breakdowns of the charts in this one so you guys can follow along with exactly what I'm talking about. We're on the trade tracking sheet here, and this is essentially where I just track all of my trades that I take on the 10K account. And so we're going to cover these bottom three, which were taken on Wednesday, Thursday, and Friday of last week. And I'm going to cover exactly what happened for each one, what went right, what went wrong, how we can learn from what happened. So essentially, as you can see on Wednesday, this is the trade setup that we had. We had a run of Asia highs and we had a strong bearish bias on the higher time frames with a draw on liquidity towards these lows here. Now, what I needed to be aware of on Wednesday was that we actually had a CPI. So the likelihood was high that we were going to chop around during the London Open and wait till New York 130 to see some sort of move. But what happened was price basically just chopped around here and hit my stop loss. As you can see, it's super choppy. And eventually later on in the afternoon, price did end up running towards the lows and taking out the lows here. What I will say about this trade is that it could have been better price action. As you can see, just looking at the charts, it's very choppy and it's pre-CPI'd. So the likelihood is high that we're not going to see any crazy move during London Open. And I could have waited for a better setup, in all honesty, but this was super clean. Like the way that price swept this high and with clear displacement broke this low here and had a market structure shift, leaving a super clean fair value gap. To me, it was like really high probability that this would play out. Although the news, I should have been more aware of the news beforehand because my bias was right. We did end up pushing a little bit higher here and then running this low. So in terms of bias, I was correct, but I think I just got in the market at the wrong time of the day when price wasn't ready to move towards the lows yet. So Wednesday, it was pretty acceptable, but we did take a 1% loss on both accounts that day, which is fine. It's acceptable. It could have been better had I waited till later in the day or just waited till CPI passed. But for that one, it is what it is. Just be super careful when trading around the news. I typically say don't trade NFP, CPI, or FOMC. You can trade the other ones. This was pre-CPI, so it was tradable. But if you trade the other ones, just make sure that you're on side because then you'll probably get a lot of momentum in your favor if you're on the right side of the trade. So going into Thursday, we had a sucky day because on the 100K account, the trade ended up being a winner of 1 to 3. And on the 10K, it was the exact same trade, but we ended up getting stopped out at break even, which just sucked, right? Because the 10K account is more important to me because I paid for that and it's FTMO and it's just one that means more because I actually paid for it. Whereas the 100K account, like I said before, got given to me for free because I have an Instagram page where I just promote their account for them. Where I basically just do a bunch of trading motivation stuff. But the 10K account is more important. So it hurt more that the 10K account lost on that trade. So breaking down this trade, essentially, this is the higher time frame here on the daily. Price has pushed up here and swept this key liquidity before having strong displacement lower here. We had a retracement into this balanced price range, which is basically two overlapping fair value gaps with a clear rejection here. So for me, I'm anticipating price to want to push lower down here towards this low and these liquidity points down here. So on the 4 hour, as you can see, we had a liquidity sweep into that balanced price range, clear displacement leg lower. And so what I was expecting to see was price reject from this fair value gap, push towards this low here. And that would be where my move took place from here to here, right? So as you can see on the 1 hour, price did come up. We took out Asia high and I'm looking to target these lows right here. Nothing crazy, just offering like a 1 to 2. So essentially in my eyes, back on the 4 hours, is that we were going to see price reject out of this fair value gap. So that was almost acting as resistance for price to push lower here, which added confluence to me going short. As you can see here, this is the pre-screenshot of this trade. Price pushes up, takes Asia high, and has a super clean market structure shift here with very clear displacement, clearly wanting to push lower here. And immediately I was ready to get in the trade. I was very confident. And in order to get a 1 to 2 RR trade, I took 50% of the fair value gap as my entry point, because had I put the entry here, it wouldn't have offered enough. And I expected price to just push a bit higher into this fair value gap anyway. So that's why I decided to just kind of place my entry there. It doesn't necessarily matter exactly where you put your entry, as long as it's within a general area of where you expect price to return to, right? As long as you're getting in on a retracement, provided there's something valid for you to get in there, it doesn't matter whereabouts you get in, as long as you're kind of getting in the move and getting sufficient RR, not trying to get the highest fair value gap, like one up here, and getting a really high RR where the chances of you actually getting entered are really low. Price very rarely retraces really high. This is the post-trade screenshot. So as you can see, it was obviously a winning trade. We pushed up into this fair value gap. We pushed much higher than I would have liked to actually have seen. And then we obviously just dumped lower here. And so I know this looks like a big difference right here, but I had a feeling when I opened the charts and saw that we would have been stopped out by spread. And the funny thing is, I always leave enough room for spread. So as you can see right here, if you look at my mouse, stop loss is quite a bit above the high. And I always do that to allow for spread, because it's not about being super accurate. It's just about getting sufficient RR and getting involved in moves. So had I put that stop there, I would have been stopped out on both trades. Because I'm taking them on two different funded accounts, FTMO had me out by spread here, which just absolutely sucks. Like, when you're right and you go through all that effort of turning up every day, doing the routine, getting in the correct state of mind, making the right decisions, only to be stopped by spread, is so demoralizing. And that actually led to my downfall for this week. But to be honest, I did take a win on this trade on my 100k account, and that for some reason kind of fucked up my entry, and it gave me a 1 to 3 RR instead of a 1 to 2. So I was pretty happy with that, but I was actually quite unhappy that I got stopped by spread on the FTMO account. So the lesson I'm kind of taking away from that is just allow even more room for spread. Like, as long as you're getting the right RR, just allow even more room for spread. I would rather be involved in the trade, a winning trade that offers good RR, than trying to get an extra zero point 0.5 and being stopped out. So I'm just thinking maybe allow a bit more room for spread, because spread's a bitch and it's going to come and get you if you don't allow room for it. So as you can see here, that was a winning loser. It was a winning trade, but I ended up taking a loss. And I make it light green so that when I look at my tracking sheet, like, it reinforces the idea that I was still right about the trade even though it lost. If this was all losers, it could lead to you just feeling super demoralized and making bad decisions. So just little nuanced things like that, where this is still greens. So when I look at this backtesting sheet, I look at it and think, yes, I was still correct. Unfortunately, it just lost. And I was up about 2% on my 10k account, having lost two trades in a row. Had I won that, I would have been up 4%, which would have been amazing. And I honestly probably would have just called it quits for the week, and then come into Friday, just not bothered about taking any trades, right? But to be honest, on Friday, we did come into the market and see a really good trade that I look at. And at the time, I thought, fuck, I wish I never took that. I look at it now and think it was still a really, really good trade idea. But there are some lessons that can be learned from it. So we'll dive into that now. So essentially, on the daily, we're super bullish on US dollar, Canadian dollar, USD CAD. And I was just expecting price to continue to push higher here. So my bias was obviously very bullish. We respected this weekly fair value gap, and we were just pushing aggressively higher. And so I'm just looking for a continuation of that move. On the 4 hour, you can see that price came down into this fair value gap using internal range to external range liquidity theory. I was anticipating price to tap into this fair value gap and then push towards this high here. But essentially, what went wrong was that I basically tried to long, and price had literally just tapped into this level, when in reality price is going to push down further, maybe to consequent encroachment of the fair value gap before going higher. So I tried to get in kind of maybe too early, but it was still a very valid setup for me, because even though it lost, what happened later in the day was price did exactly what I expected. It just reversed and went towards this high here, and I obviously got in trying to long too early. So this is the 15 minutes, just so you can see. We also have this super clean order block right here that price was respecting inside that fair value gap. So essentially, this was my entry. One thing to note is price did run Asia high, but before I would have really probably avoided taking this, because we've already taken a key high. But I really did have a strong bias expecting price to push higher on this day. So I just thought we've got a double purge. We purge the highs and we purge in the lows, then we'll reverse. As you can see, we purged Asia low. We tapped into that 4 hour fair value gap with a strong bias on the daily and had a clear market structure shift denoted by this little light bulb, leaving behind a fair value gap. So stop loss went below the low, allowing for a bit of spread. It could have gone below this low, but like I always say, I would rather get in the trade and not try and push for more RR, especially because it could push all the way down here, stop me out by spread and run. So I just like to give myself room to breathe. Clear fair value gap here, and honestly, I really did expect this to tap in and just run to the highs. But as you can see, this is what happened. Price essentially just violated that fair value gap and ran straight for the low. Later in the day, I don't have a screenshot of this, but later in the day, price it pushed further lower and completely reversed and ran for that high. And so, as you can see here, this is how deep we push into that 4 hour fair value gap. It's not very deep. And so, something that I've noted and I'm going to learn from is that price is likely going to push deeper than you think into fair value gaps. And that something like that probably isn't good enough. But it can be. I'll probably still take trades like this. So that one obviously ended up being a loser. And another thing to note is that on the daily, I know it might be hard to see, but this candle swept the previous day high. And so that's something to note that once we take the previous day high, we're likely going to push lower first. Couple that with the idea that Asia high was also taken. There's a good chance that we're going to push lower, deeper into that fair value gap. But that's obviously something I've just learned and I'll remember for next time. But this was still a good trade in my eyes. There's nothing to complain about. Just unfortunately a loss. And just, we can learn the lessons of if price takes previous day high and Asia high, maybe it's going to go and push deeper into that fair value gap below. So essentially taking a loss on Wednesday, Thursday and Friday, although that Thursday was actually a winner on the 100K and should have been a winner, and then missing a good opportunity to trade silver basically led to me kind of being on the charts for way too long and trying to find a move where I could get some of my profits back for the week. And so on Friday, I did take a trade that was it just shouldn't have been taken. It was New York session on Friday towards the end. Price action was choppy. I should have called it quits for the week because I was already down on the week, but I just let myself go a little bit and just took this trade. And I was in the trade and I was thinking, yeah, this is going to lose. But I have a rule where it's, you're in the trade, you have to eat whatever the outcome it is. Even if you think it's going to lose, you have to eat the loss because you made the mistake of getting in the trade. I know it sounds stupid, but it teaches you a lesson to make the right decision first and then be confident in the trade you take. And then if you make a bad decision, it teaches you to face it as a loss. And there's also been too many times where I've taken a trade and closed it because I thought it was going to lose and it won. So my rule is to simply, if you're in the trade, bad or good, eat the loss, learn a lesson. And so that's what I did, even though I thought it was going to lose. I didn't take it on my 10K account because obviously I didn't think it was good enough. But essentially, a couple of other things that I want to cover quickly that caused me to have a bit of a bad week was overconfidence. I've been back testing and I had 4 wins in a row. My bias was correct on the first 2 trades of the week, even though they both ended up losing. My bias was correct, which actually led to me being overconfident. Actually, one of them was supposed to win, but spread got me, spread the bitch. I was distracted on Friday as well. I was in and out the house. I was eating like refined carbs and stuff. So my brain was really not as sharp as it could have been. And the series of events of the week just led me to making terrible decision. So that will not be happening again. I should have stopped in profit on Thursday and just accepted the loss on the 10K account. And then at least I would have finished well on the week in terms of mindset, in terms of making the right decisions. It would have been a great week. Even though the 10K account was down, but the 100K account was up. And one more thing is that I was slightly being influenced by other traders because I was looking at Twitter and I saw some traders where I just thought, oh, that's a entry that looks a similar entry to mine that I typically wouldn't take. But the trade that I took on Friday, which was a shit trade, was kind of similar to another traders that I saw, which kind of influenced me to think it was a better trade than it was. Coupled with me wanting to make money back and just making poor decisions and revenge trading and feeling overconfident in myself that this trade is going to win. So I was kind of all over the place at the end of Friday. But obviously I decided to eat that loss and then I just went out and played some golf and just, kind of just relaxed. And reminding myself that taking a loss is not the end of the world. I need to recoup myself, take a breather, and just get out into the real world and not get too carried away with what's going on the charts. And then just take some time to reflect at the weekend. So the lessons I've learned this week are: give yourself a little bit more room for spread. When you have a shit day or a shit trade that should have been in your favor but wasn't, take some extra time to reflect and journal and think, and not come rushing back into the market wanting to make that profit back. Or after a series of unfortunate events, not wanting to jump back in the markets and make that profit back. I overlooked the principle of focusing on the process over the profits, and I was thinking too much about the profits than making the right decisions. And it feels like a setback, but obviously every time you set back, there is a lesson to be learned from that loss. There is a seed of, for every loss, there is a seed of equivalent success that comes with it. And so you've got to get that seed of equivalent success and run with it and learn from it and grow. And that's what it's all about, guys. So if you enjoyed that video, please let me know if it was easy to follow along in the comments, because this is a new kind of way I'm making the videos, because a lot of you requested to see the charts. And as always, guys, hit the subscribe button, join the Telegram if you want to become a successful trader. It's not a get rich quick scheme. We want to do this professionally and long term to achieve financial freedom, location freedom, and time freedom. So as always, guys, thank you very much for watching this video, and I'll see you in the next one. Hit that subscribe button. Peace.